the Dow's the big ripper, Malcolm, today. You do have some broadening into financials and discretionary and industrials and healthcare. And there's money coming out of the biggest winners within the tech universe over the last month. A lot of the chip names are weak. Some of the cyber names are weak. And we can get to the individual Broadcoms and the CrowdStrikes in a moment. But just the overall makeup of the market today, what do you take from it?
I think we're probably seeing one of the first of many tests of this existing bull market within tech, the AI revolution continuing on. The narrative is going to continue to be challenged this summer and into the fall as we've got these massive IPOs that are going to show up here. We've got a lot of spending and investing that has happened in both private and public markets. And I think investors are now trying to make sure that they're not caught off sides, right? There's a lot of hearkening back to 1999. There's a lot of talking about whether this is 99 all over again. And I think one of the key differences here is the retail investor is able to move a lot faster than they were back then. They're also a lot more educated on the markets than they were back then. And so I think what we're seeing is a lot of people trying to make sure that they line up on the right side. I don't think that this is necessarily indicative that we've reached the top and it's time to ring the bell here, but I do think we're going to see these kinds of ebb and flow moments throughout this year as we have these big events named and listed.
If you look on the board today, you know, a lot of the biggest monthly winners, as I was saying, you know, the CrowdStrikes and the Palo Altos, which even with the declines that you're seeing today, are still up near 50% over the last month alone. Everybody knows what's been happening with the chip stocks. AMD over the last month up 53%. Micron over the last month up 75%. So a little bit of money coming out of those areas and finding a home elsewhere in some of those other sectors is probably a welcome sign for those who have been looking for a little more healthy-looking market.
I completely agree. I mean, this is what a consolidation should look like. These parabolas have occurred. They have to come down a little bit and then stabilize before the next leg higher. And that consolidation is healthy because it sets up the next leg higher. I do want to draw a distinction. There's no reason that I can see to think that there's going to be a correction anytime soon, whether it's the market overall or semiconductors or technology. I think for a real correction to happen, you'd have to have a massive sentiment shift. Now, that could happen if, say, things with Iran get meaningfully worse. But let's face it, this is a market that has grown very inured to what's going on in the Persian Gulf. It's grown very inured to West Texas Intermediate being somewhere around $100 a barrel. So a consolidation is healthy, very unlikely to see corrections. But I want everybody to consider, if you, as most of us have, some of these parabolas in your portfolio, it is a good time to do some risk management, not sell the entire thing, but trim some and go into other areas. I think that's what's happening, Scott. I think that's why you see a nice outperformance today from the equal weight S&P 500 versus the Nasdaq, or the Dow versus the S&P 500. Rotation is healthy, if you ask me.
And it's not like tech's having a miserable day. It's just, as I said, the areas that have gone up the most, the parabolic moves in many respects are the ones where a little bit of air is coming out. But you're getting buying today in the Microsofts. You're getting it in the Alphabets. NVIDIA, which hasn't traded well at all, is up 1.5%. The gains in other areas of the market, other parts of tech over the last month, so outweigh these areas. So it's not a surprise either that money would be going back. It's not like the trend is messed up by any sense of the imagination. It's just looking at chips. Maybe Broadcom initiated that last night. Maybe CrowdStrike initiated it for parts of software. But the trend feels like it's still very much intact. It just may be a little bit shifty within the tech universe.
Yeah, I agree. The trend's intact. This is a healthy rotation. As Jim noted, and you kind of have to have this and consolidate and show strength in other sectors in order for it not to be a correction and it really kind of take the next leg higher. I completely agree. One thing that stood out to me yesterday was when President Trump talked about the Strait may not open until Labor Day. You know, he's setting a time frame out there, and I think that put the market in general on a little bit of weak footing. Now, we know how a lot of his negotiation tactics work, and that could start getting moved up or into the more near term, and that becomes a bullish catalyst. But these two companies, Broadcom and CrowdStrike, I don't think they were bad reports by any means.
No, they weren't. But expectation-wise,
Yes.
you're in a real difficult playing field.
I mean, Broadcom just the last week was up 20%. So we're just giving that back. You had these reports come out when not only also you had the comments from Sam Altman talking about AI spending or in the budgeting of these companies correlating it to the spending. So you had some just weak footing yesterday, and then these reports come out, and then it exacerbates some of the downside.
Hey, are you buying more Broadcom like you own it? I mean, so their revenue missed for the first time since December of 24. Their outlook was unchanged. It's not like it was, but you can't be unchanged. Your outlook can't be ho-hum in the environment that the stocks have run up in. That's just not going to cut it, as they're finding out the hard way, and you, as an owner of the shares, are as well. Yeah,
it has to be a real raise on that guidance. It can't just come in just below the high expectations of the guidance. It was a good report. You know, some of the things that are emerging from here is where their moat is on the TPU. You know, they have that contract with Alphabet going on, I think to 2031 it might be, but names like Marvell are starting to appear in the mix there, and you've seen that name go parabolic. Now, Broadcom, like I said, was up 20% in the last week. It's given that back. I think it was a good, it's been still a great name this year. We're not buying more of it right here, but I do see a tremendous amount of support if it were to keep going. 355, 360. That's where the 200-day moving average is. That's where consolidation was earlier this year. So if we did keep going and there were a real correction in the name, I think that's where you want to be buying it.
Well, the street's not giving up in any way, shape, or form on this story. Wells Fargo's bullish. They're buyers of the weakness. You got 6 target raises today. JPM to 580. UBS cut theirs down slightly, 485, but the street remains bullish on this stock. And I don't come across very many investors on this program or otherwise that are not bullish on this name.
I don't disagree with any of that, but I think what also factors into this that we're not talking about is the fact that you have Taiwan Semi CEO saying, we don't see any way that we're going to catch up to global demand for semiconductors anytime soon. And a lot of the excitement and the bubble that we've talked about, the run-up in chips for the last few months, has been based on this idea that the remaining performance obligations continues to grow. And it's kind of the point that I've been making for a while, that the reason this industry is so cyclical is because it takes 3, 4, 5 years to build the infrastructure necessary to actually create the chips that these companies are relying on. And so by the time they actually build the infrastructure needed to create the chips, the foundries, the demand has subsided one way or another. Either we figured out another solution and we don't need it as much as we did before, or we've already gotten the supply that we needed from somewhere. And so I think that that's also what's being reflected in the response to Broadcom specifically, is this idea that, yes, the number was decent. Yes, I mean, we're talking about, 48% revenue growth year over year, that any other company reporting those numbers would be up 15% today, not down. But I think that this is indicative of that sentiment too. Where can we actually kind of stop the excitement over RPOs and actually start to be concerned about legitimate sales happening now?
Bryn, you gotta like the fact that you've got an almost evenly split market performance over the last month. If you take the Nasdaq over the last month's up 7% thereabouts, S&P up 5.25%, Russell 2000 up near 5%. The Dow with its big gain today up about 5 1/3 or so, approaching 5.5% over the last month. It's hard to argue about the makeup of all of that, especially, as I said, at a time when people are hung up on the fact that, yes, we do have a narrow market at the top. We get it.
Right. I mean, the narrowness is not necessarily just in performance. The narrowness is the size of the top companies just make up so much of the return because their size. But that is very different. To your point, there are other sectors that are, and other securities that are doing well. To me, what I think today is really interesting, and what I've been thinking about for some time, is really, when you look today at the semis being down, besides NVIDIA, is how the construct, we're obviously big investors in the Qs, has just meaningfully changed over the last 12 months, really versus the last 5 to 10 years. And so if I were to tell you Meta, NVIDIA, Apple, and Microsoft and Google are all handily positive today, but the Qs are down. They were down 1% earlier. You'd say that's not possible. But because the semiconductors, the Intel is like a top 15, you have Micron, you have Broadcom, you have these semiconductor companies are now such a big part of the Qs. It's interesting how much that's changing. And so I think this bifurcation is going to continue. But I do think for Q investors, it's very interesting to see those other, traditional leaders are up very nicely today, but the Qs are down, which is telling me just investors need to understand what the biases of the Qs are right now. And it's definitely going to be in the non-NVIDIA semiconductors deciding if that index is going to be up or down for the day.